This is one of those scenarios when we talk about buy the dip. Yeah, absolutely. Your favorite stock, if we get any weakness on Monday, any stock that is above the 50-day moving average that you like, again, use the 5-day moving average as an area to get back into the stock. So if the stock...
Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well. Hope everybody is having a great weekend. Hope everybody had a great week of trading. We'll get to that in a second. Very aggressive action. Just a couple of pieces of business. Last month, if you guys remember, we've been kind of breaking down the video of the pancakes and pivot series that we brought back last month. A new one will be happening the first Sunday of every month. So next Sunday. So for all you guys who are planning to join us or already in our walls, next Sunday is a new edition of the pancakes and pivots broadcast at 9 a.m. In the webinar. If you've been watching kind of the YouTube videos, we've been releasing kind of parts of it. This week we've covered how to hedge an overnight position properly with the Qs. Also, let's see, what else did we talk about? How to technically hold a position and exit position, how to identify a reload seller, and how do you know a stock is going to go right from aggressively from a pivot. You know, we kind of try to take everybody's questions and kind of break it down into little mini series. So for all you guys who are joining us, so next Sunday it will be in the Zoom webinar. Also, again, for all you guys who are considering pivots, and again, I'll be the first to admit it, pivots is not for everybody. If you have a $500 account, $2,000 account, $3,000 account, your job is to really learn the business, really understand the difference between what a bid and ask is. Okay, the difference between taking an offer and hitting a bid, not reverse, right? All these little nuances. Are pivots for you? Probably not. I still think you need to learn your foundation, the most basic things. But for all you guys who are on the fence and been, really just kind of following along all these times, we're running a $47 sale here for I don't know how long. I have no idea. Anyway, but the point is, if you are on the fence and you want to kind of check it out, it is really cool. You get the live webinar. Pivots are not for everybody, but for those who are on the fence, especially trade technology, it's pretty damn cool. And I think for all you guys who are looking for something different, again, the normal, right? Everybody looks at the normal. There's an alternative to the normal. So if you are interested at some point, at somewhere, I'm sure Kyler will pull it into the video, and I'll see you there. I'll see you there. So let's talk about the market, right? Let's talk about the market. Let's look. Last month, if you guys remember last month, all the action was sell bias. Why was it sell bias? Because we were below the 50-day moving average. And at times you did see rallies in the market below the 50-day moving average, but the predominant action, the predominant sentiment was well below the 50-day moving average, and only until we started to reclaiming levels here. And that's the whole point of technical analysis. When we started reclaiming levels, especially the 5-day, which is the shortest term sentiment, the 10-day, which is the birth of the trade, and then slowly but surely we saw the 20-day get reclaimed. And once we got to the 50-day moving average, again, if you want to reference, and trading is all about reference, it's all about muscle memory, it's all about repetition. If you go back to May the 20th, you had the same type of event happening. We finally reclaimed the 50-day moving average, right? You can see all the selling below the 50-day moving average. And once we reclaimed the 50-day moving average on May the 20th, we started a 4-month rally very aggressively until we gave it up on September the 27th and started going lower, right, for about 2 weeks. And this week was cool about the aggression of the market, and it really does show you how important technical levels are. Once we reclaim the 50-day moving average, if you guys noticed, all the behemoths, right, all the Wall Street darlings, all the stocks that hedge funds and pension funds and mutual funds want to own, the great growth stories of our generation, they're the ones that started going absolutely nuts, right? You had Amazon went on a huge run, right? Huge run. Obviously gave some back on Friday, but had this massive run, a 3-day run above the 50-day moving average. Apple reclaimed all levels. Again, here's the 50-day moving average, helped by the Apple event. I believe they're coming out with a new MacBook or Series 3 of the AirPods, whatever the case may be. The point is, look, it got aggressive above the 50-day moving average. You look at Tesla, right? And we'll get to that obviously in a second. Once it reclaimed the 50-day moving average, not only did it start a series of events going higher, and again, this is going back months and months and months, but you could tell the importance of the 50-day moving average. It never gave it up. You guys notice that? It never gave it up. So once a stock stays above the 50-day moving average, then and only then can the stock get aggressive. Once anything is under supply, it's like a drowning victim, right? They're underwater and they're trying to get their head up and they just can't get going, right? They just can't get their head above water. And think of it that way for stocks as well. But once they're above the 50-day moving average, you could breathe. Right? You could breathe. You're not under pressure. There is no boogeyman trying to keep you down so you don't be able to run. And if you notice, every single stock that was above the 50-day moving average, especially in technology for the last 2 weeks, had really great runs. And this is kind of where it brings us to where we closed on Friday. So we reclaimed on October the 18th, and we've been putting in a five-day distribution above the 50-day moving average. And if you look at all the indexes, the final tally, you'll notice that all the indexes were up about 1%. And the NASDAQ did incredibly well this week. All the big runners had really good runs this week. And we had a little bit of a nasty pullback on Friday. And you saw a lot of names get really pulled. You had Google got pulled, got Amazon got really pulled, got Shop got really pulled. But the names that started getting above the 50-day, that started their runs, started getting extra aggressive. And those names were Netflix. Those names were Nvidia. Those names were Tesla. So it really does show you how, number one, the importance of the 50-day moving average. The longer it stays above the 50 and starts building, that's when you start getting a lot of traders trying to overthink and trying to time the market and anticipating a move back below. And usually when you start building, okay, and building is price action over a series of numbers, right? So if you have a price action over, say, $325.25, and it's just building over that price, the longer it builds, the higher probability it's going to go higher. And I think Friday's action, a lot of traders started turning around and said, well, this market is going to start going back down. Well, why? Why do you think that is, right? Why are you trying to outsmart the market? Why are you trying to put yourself in a position of guessing? Okay, it's all about data. I've been kind of referencing that for a long time. Our opinions don't matter. Remember that. Your opinion doesn't matter. My opinion doesn't matter. The only thing that matters is the price action, is the scoreboard. So if the scoreboard is building above the 50-day moving average, and we know how important that 50-day is, the higher probabilities the next move is higher, not lower. And on Friday, you saw a lot of traders, especially new traders, that were trying to say, well, this is the top, we're going to roll over. They got caught off the bottom range. They got caught off a lot of bottom range on stocks that were just starting to reclaim the 50-day moving average. So just kind of, especially if you're new traders, just kind of just keep this in point. Above the 50-day, any sequences that take above the 50-day for multiple days, that's bullish. Even pullbacks, okay? Remember, there's a big difference between a stock moving lower than a stock going down, right? A stock going down is fine. It means it's profit taking. A stock moving lower is a directional bias where that stock should continue to go. So above the 50 bullish, below the 50 bearish. And what we saw on Friday, all of this week, was really good action. The bulls held very firm. A little bit of profit taking, which is fine. Again, there's nothing wrong with a little bit of profit taking as long as these stocks are still above their range and they're continuing to build off the previous pivot, whether it's macro or micro, but the point is start looking for ideas that just held, right? Held. And the longer we hold above the 50-day moving average, the higher probability that we're going to go higher. So where's the next spot for the bulls? Obviously, continuing to close above 370 for the bulls is a must, right? I think we could all agree on that. The longer we stay above 370, the better. So any close this week, and again, I'm bullish this week, so don't misconstrue anything. But the longer we build above the 370 moving average, the next area of interest for us is this 379 level. This 379 level is this linear regression line that's crossing the upper Bollinger Band. That's the last supply for the Qs. And if we can close above 379 on the Qs, then we have all-time highs. There's obviously a catalyst for it. You have the Super Bowl of earnings going on this week. You have Facebook on Monday. Let me give you the whole list. We have Facebook on Monday. What else do we have? We have Facebook on Monday. You have AMD, Microsoft, Twitter on Tuesday. You got Boeing on Wednesday, then Thursday, right? You got Apple, Amazon, Starbucks, so forth and so on. And then next week, all the other ones, right? So we were right dab into earnings seasons. We obviously have a catalyst to get us above the 379 level. And the most important part is we're going, in the direction, right? We're not going, we're not pissing into the wind. We're going with the tidal wave and not against it. So we definitely have a catalyst. And the key is, can the earnings seasons propel the Qs over the 379 level to start attacking all-time highs? When you look at all the other indexes, right? IWM has been very, very puzzling considering how much speculation money there's been on the table for such a long time. It's very ironic that the IWM hasn't busted out to all-time highs, especially when you think about speculation money. There's no greater speculation money right now than Bitcoin, right? Bitcoin hit almost 67,000, right, this week. So the idea that the IWM is still kind of going sideways and going sideways for quite a long time right now is very, very puzzling, but I don't think anybody's really worried about it. I don't think anybody's really puzzled about it. When you look at the SPYs, again, slowly but surely, right? Here's the 50-day. Everybody see that, guys, right? The longer it stays the 50-day moving average, they're going to keep on walking it up, and that's the whole point. The longer above the 50, the higher probability goes higher, and then they just start grinding. Even on Friday, when they tried to sell off the market, look what it hit, right? The 5-day moving average, the shortest term sentiment that you have in the market. So this is set up for all-time highs. You look at the Dow Jones Industrials. Again, look what happened when the Dow, crossed above the 50-day moving average. You have a series of events of just grinding higher. Even when they tried to sell it off back-to-back days, look at the common denominator, this rising 5-day moving average. Hit the 5-day moving average bounce, hit the 5-day moving average bounce. So this is a very, very organic bullish sequence that we're in. This is one of those scenarios when we talk about buy the dip. Yeah, absolutely. Your favorite stock, if we get any weakness on Monday, any stock that is above the 50-day moving average that you like, again, use the 5-day moving average as an area to get back into the stock. So if the stock had a move from 125 to 138 and it goes back to 128, which is the rising 5-day moving average, there's a high probability that shorts, eager shorts, going to get trapped at that level and the stock is going to resume. So the technicals, the internals, the breadth, everything is super bullish for this week. Listen, can things turn on a dime? Absolutely. We could be having this conversation a week later under 370, and I could be turning around and saying, well, the bulls dropped the ball on this one. Now we're facing where demand now becomes supply and blah, 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 blah. We're not there, right? We're not there. So I want to obviously give and continue to give the bulls the benefit of the doubt going into this week. And the longer we stay above the 50-day, you're going to see a lot more names getting pulled up one by one by one. And once they start reclaiming the 50-day moving average, we're going to go higher as well. So, great week. I mean, I think that, again, if you trade technology, and this is kind of my point about pivots, you don't need to trade technology to trade pivots, right? You could trade pivots on a $2 stock, on a 20-cent stock, maybe not 20-cent stock. But the point is, when technology starts to roll and big macro levels start to fall in tech, it's just an absolute marvelous ride. And that's exactly what happened this week. Tesla was just, incredible. And again, guys, number one, Tesla didn't break out at 900. Okay, you hear a lot of traders talking about, well, Tesla broke out at 900. Yeah, Tesla confirmed the highest level, all-time highs that it was, but it didn't break out at 900, okay? Tesla broke out above this linear regression line at 715, okay? And then it confirmed 780, and then it confirmed 815, and then 821, and ultimately 900. This was just a big continuation macro move, but yes, not taking anything away, Tesla was an absolute monster this week. First close over the January 25 highs of 900. We saw an absolute ridiculous amounts of call buying this week. For next week in the end of the month. For the 950s, we saw a bunch of thousands being traded end of the month and November's. So Tesla was an absolute beast. Nvidia broke out this week, just a great run. Remember, here's the 50-day moving average. It broke above the 50-day moving average. If you've been following this broadcast, that was the swing area, right? That 1350, 14 level, it took out all-time highs and obviously reversed a little bit. But the point is, again, here's where you want to get Nvidia back, right? If you want to get long Nvidia, you see how it keeps on bouncing off the 5, right? Off this orange line, bounce. So on Friday and Monday, if you get a weak open on the video, you're not looking to short it. You're looking to try to remount this thing around where? Around the 224, the 5-day moving average, for a possible bounce off that level. Even a name like Square, beautiful run by Square. And again, here's a perfect example why technical analysis is so cool. You don't need to guess. So it took out the 252 level, reclaimed the 50-day moving average at 57, and went right to the upper Bollinger Band, which was supply. Again, stocks go from supply to supply to supply. You don't need to guess, right? You don't need to wonder where the next move. All these silly lines that I hear a lot of traders calling them silly lines and unnecessary lines, they're giving you an indication where the probability goes. But here's another perfect example, right? So it had this big move, and it hit the 5-day moving average, and they held it and they bounced right back. So Monday, any type of weakness that we come across, obviously is a buying opportunity for any stock that is above the 50-day moving average. And as long as we continue to close above the 50-day moving average, this is definitely a buy the dip scenario. So let's talk about Friday's session. Very aggressive week. Really good aggressive week. Many names broke out. Many names, challenged their all-time highs. Again, for all you guys who've been swinging Nvidia from that 1350, 14 area, 295, 290, 229.50. If it builds, has a puncher's chance. All-time highs 30.5. Can start and leg up. Here was Nvidia, right? Here's Nvidia. It took out the 229.50, took out 30.5, and traded right to the upper Bollinger Band at 231.30. I thought it could get to 231.50, got to 231.30. Right? Anyway, still like it higher. AMD has been an absolute rock star. Again, here's a perfect example of a stock that reclaimed their 50-day moving average, right? Here's the 50-day moving average that it reclaimed at 111.18. And look at the run. I mean, this thing is poised for all-time highs. This thing is sitting there a stone throws away. Again, here's the same scenario for Monday. You see how it keeps on bouncing off the 5-day, right? Bounce off the 5-day, bounce off the 5-day, bounce off the 5-day, bounce off the 5-day. This thing hits the 5-day. If there's any weakness at the open, again, this is an area that you definitely want to buy the dip. So continued monsters should see all-time highs if the market continues to be good. Thursday was a really big pivot on Netflix. They engulfed, right? It was a delayed reaction. They engulfed the previous day's selling on earnings, and you could tell the sellers were comfortable when Netflix was only down $8-9 after a 150-point run. You could tell the sellers were comfortable. It was just a day late reaction. So the previous day, 639, 640 would engulf, right? So that was a big pivot here. And then on Friday, 656 needs to confirm for a potential 666, 67 run. Here was Netflix. Right here was Netflix traded right to supply right around 66. A really strong move there. And again, the cool part about the strength and a lot of these names like Tesla and Netflix, they didn't care that the Nasdaq was being sold off, right? That's what shows you that there's still a great amount of incredible amount of speculation money out there that the indexes are really not holding a lot of weight. So this is why I really like the market. Zoom never really got up to this area here, got upgraded and got faded right away. Docu, same thing. Docu, it tried to make its initial push here, never built. OKTA I still really like, never got there. CDW, not a big move. I wasn't really watching this thing, not really my thing, but it took out the 91, ran up about $2 or so. Highest close in this whole formation, it probably goes higher. It trades a little too thin for me to have any interest. RBLX 84 and a half needs to build. RBLX looks good. It really looks good. A really big buyer came in for the 85 calls. This is the highest level. If this thing can just confirm this whole channel here, look how much room it has to run ahead of earnings. So I still really like RBLX. EA was a nice little pop there, 141. Needs to build. Here was EA. Again, here's a perfect example of a stock hitting supply. It confirmed supply and it went to the next supply. Ran up about $3 or so on EA before the market kind of turned away. Take on the way up. Here's my point about Nvidia. 231.50 is first supply. It traded 231.30. Again, power of technical analysis is very cool. You don't need you don't need 1,000 people's opinion. You don't need pep talks. You need a process, right? You need to really embrace technical analysis and stop 20 cents away from supply. DraftKings, I still like lower. Friday took out a big macro level, 47.10, 47. If it builds below, can flush. Here was DraftKings. I still like this thing lower. It closed right at the lows. Here was the whole 47 area. It took out 47, traded to 46. It hasn't had a big move yet, but if this 46 confirms on Friday and there is some weakness on Monday, if there is some more weakness in the market, look how much room you have to go. So I still like this thing. For all you guys who are swinging it, good job. I still like this thing lower. Here was a Tesla from Thursday. Red to green when the stock was only, again, same thing as Netflix. When the stock was down 7-8 points, I said that the sellers are too comfortable. The sellers are too comfortable. If this thing goes red to green and starts taking out areas of 8.7, 8.78, it's going to explode. That's what Tesla did on Thursday. Phenomenal move on Thursday. And then we talked about on Friday, 900 is the magic number. There's no room for interpretation here. It's either going to go off that 900, it's not. Obviously, this is all-time highs now on Tesla, closed right at the highs. And again, here's where I think Tesla goes this week, right? We could see 930, we could see 950. And again, if the market continues to be good, you'll be shocked how fast it could possibly get to 1,000. So Tesla obviously looks just amazing, just an absolute amazing move there. Here it is, 917 next supply. November $1,000 buyer came in, EA 144 on deck. And I think that's it, right? Here comes DraftKings, take on the way down, new lows, blah, blah, blah. And that's it. That's it. So, look, I'm definitely bullish going into this week. There's some names like DraftKings I still think go lower. Tesla on any dips. Don't even think about it. On any dips into rising support, you gotta buy it, right? If you trade Tesla and you don't buy it into rising support, it means you really just don't trade Tesla. This is the time. It looks great, and the longer the market stays very active, especially building above the 50-day moving average, the higher probability that all these names continue to get pulled up. Guys, have a great day. Again, for all you guys who want to join us this week, again, Kyler will put in the link. It's really cool, and again, it's just an alternative from the normal, right? You've tried the normal, everybody trades the normal, but there's something in the edge of these pivots that once you see and start to realize it's actually there, you're going to start looking at the market a little bit different. Guys, have a great day, have a blessed Sunday, and I will see you all tomorrow. Take care.